Hi, and welcome to this week's Market Insights video. Well, we're heading into one of the most eventful weeks of October. We've got central bank decisions, inflation data, and some pretty impactful corporate earnings coming out all this week. So let's dive straight in, shall we? We'll start with the US, and all eyes are on the Federal Reserve. Now, they're going to announce their interest rate decision on the 29th of October at 9 p.m. GMT plus 3. It's quite well documented that the market is pretty much pricing in a 99% probability of a 25 basis point cut. Now, that would bring the rate down to 3.75 to 4%. Now, although the cut is pretty much priced in, it may weaken the US dollar in the short term. Now, with such a probability, I think it's fair to say that eyes are going to turn towards the report and what Fed Chair Jerome Powell has to say in his press conference at 9:30 p.m. Whilst another rate cut is anticipated for December, Powell may introduce some uncertainty regarding the pace of future easing. Now, if the Fed does signal a little bit of hesitation about further cuts, the US dollar could find some short-term support. Now, last time the Fed cut rates was back in September, and again it was priced in, but the US dollar did weaken slightly. However, since then, and this is why these press conferences are important, Powell stated that given the pressure from the labour market and prices, the Fed could not manage the situation as a whole. He said, "Our tools cannot do two things at once." So uncertainty over future cuts may well support the US dollar as they did last time. Now, later in the week, attention is going to shift to the PCE price index, and that's on the 31st of October, 3:30 p.m. GMT plus 3. Now, this is the Fed's preferred inflation gauge, but it's unlikely to sway policy direction significantly given this current shift towards monetary easing. Still, saying that, better than expected actual data may support the US dollar, whilst a weaker report may put some more pressure on the US dollar. Okay, we're going to move north now over that US border and into Canada, and they've got their interest rate decision as well. That's the 29th of October, 4:45 p.m. GMT plus 3. Now, markets again are expecting a 25 basis point cut, and that'll take their rate down to 2.25%, pretty much aligning with some other global monetary policy trends. Now, the key drivers of market reaction will likely be the monetary policy report. Again, it's often what's said after the headline figure that really matters. Now, that provides updated economic projections and risk assessments, and that press conference is going to be on at 5:30 p.m. The Bank of Canada has already delivered some pretty substantial easing over the last year and this year, and analysts believe that that cutting cycle could come to an end by late this year or early 2026. Now, if projections suggest there are more rate cuts ahead, the Canadian dollar could face additional downside pressure. So, as I've said, once again, it's often what's said after the headline figure that really impacts what's happening moving forwards. Now, as I mentioned in the introduction, it is a major week for corporate earnings, especially in the US technology sector, where results will offer some valuable insight into how companies are managing AI investments and cost pressures. And of course, we've seen a lot of talk recently, AI, and is this a new dot-com bubble? So these figures are going to be quite impactful. And we've got Meta Platforms report, and investors there will focus on progress in AI monetization and infrastructure returns amid some elevated capital expenditure. For Alphabet, attention will be on Google Cloud growth, advertising resilience, and how the company is balancing AI spending with profit margins. Microsoft, next up, their results, analysts will evaluate cloud and AI scalability amid some sustained enterprise demand. And we'll turn our attention to Apple, and of course their performance will be pretty much driven by the iPhone 17 launch, but also their services revenue growth, though we can't forget the risk associated with supply chain costs and tariffs that remain a headline for Apple. And finally, we'll take a look at Amazon, and investors will monitor the AWS performance, which of course has been in the news in the last week or so, plus advertising momentum and AI infrastructure spending. Now, together these results will set the tone for a broader equity market, particularly when there's such big players in these major indices, and especially the Nasdaq and the S&P 500. So they are going to be quite important. Keep your ears and your eyes open. And lastly, we cannot forget geopolitical concerns, and US-China relations are again smack bang in focus. Now, President Trump has stated he expects a fantastic deal when he meets with President Xi Jinping during their meeting at the APEC summit in South Korea. However, optimism remains limited as Beijing's recent export restrictions on rare earth materials have dampened hopes for a significant breakthrough. Any progress, or, to be fair, lack thereof, could influence market sentiment, especially for commodities and Asian equities. Well, that's it for this week. We've got some major figures coming out: central bank decisions, inflation, corporate earnings. Market volatility is expected to remain elevated across most sectors. So don't forget your risk management techniques and keep yourselves informed. Check out the news and analysis section on the FX Open website for some real-time updates. Thanks very much for watching, and as ever, we wish you luck with your trading in the week ahead. Bye for now.